Hi guys, it's Tuesday, which means it's time for Tax Talk Tuesdays at 2. I try to do this every Tuesday at 2 o'clock. I come to you, I give you some tax tip that I think may help you. Today I am going to be talking about why now is an incredible time for you to be a business owner. In light of the new law that was recently passed, I know last week I tried to give you the same information and, had some technical difficulties. So I decided to come back, with the information today because it's just so great. So if you can hear what I'm saying, I see Everett has joined the Facebook Live. If you can hear me, I need you to let me know that you can hear me. If you could just comment in the comment section, say hi. Shirley Ferris, I see a lot of people on from North Carolina. I really appreciate you guys joining in. And if you can hear me, Lakia, can you let me know? Can you just comment in the comment section, letting me know that you can hear me? Okay, I'm going to test it out. Can you hear me? Okay. Hi, Jimmy, how are you? Can you guys hear me? Thank you so much. Okay, now I can get started. I want to make sure everybody can hear me. Okay, today I'm so excited because now I am going to get an opportunity to tell you why, if you have a hobby or you've been thinking about being in business and you've been on the fence, with this new Tax Cuts and Jobs Act, now is a perfect time for you to go ahead and take that leap of faith and become a business owner. Before I get into that, let me just tell you a little bit about who I am. My name is Beverly Winstead. I am a tax resolutions attorney. I work with businesses and individuals. Sometimes when they have problems with the IRS, I help them work through their problems. I also do tax planning, business structuring with businesses and individuals so that they can lower their tax bill or, develop some tax strategies. So ever since this law has been passed, I've been talking to various business owners, making sure that they are positioned so that they can take advantage of all the tax laws. The other thing I wanted to say today is, it's Black History Month. So I wanted to start off by honoring a historical figure. Today I am choosing Madam C.J. Walker. So she was for those who don't know, she was one of the first self-made millionaires, and she became a millionaire by developing or manufacturing hair care products. So, kudos to her. And she became that millionaire at a time when, it was really unprecedented, unheard of for African Americans to do it, and the fact that she was a woman. So I see a couple more people have joined. T. Mac, thank you so much. Rodney Coleman, I see my people from North Carolina on. I really appreciate it. If you can do me a favor, if you hear something today, if you know an entrepreneur, you know a business owner that can benefit from some of the information that I'm delivering today, if you can just hit the share button, if you can tag them, it will be so incredible. I want to make sure that everybody benefits from this information, because a lot of times we don't get an opportunity to disseminate information within our own network. So I want to make sure you do that. Number two, if you are a business owner, and you want to drop your name in the comment section, or what you do, as well as what you do, maybe your website, someone may be looking, because I'm trying to reach a lot of business owners so that they can get this information. Someone may be watching this Facebook Live, and they may need your services. So particularly, I see Edeline has joined, awesome bookkeeper, accountant down in Atlanta, Georgia. It's tax season. If you need help down in that Atlanta area, you want to definitely reach out to Edeline. I also saw that Lakia Bourne joined us live. Lakia, make sure you put your information because you're here local. And for all those business owners who need help getting your books and records in place, definitely you want to reach out to Lakia. Lakia, drop your information in the live. Okay, so let's go ahead and get started. So one of the first things I'm going to do, I have to give you the background in terms of businesses. So I'm going to do a brief background on the various types of businesses. Then I'm going to go into what the law actually says, this new law. So typically when you are thinking about, well, you have a business, you normally structure yourself in about 5 different ways. You have 1 of 5 different ways. You may want to be a sole proprietor. You may want to be a limited liability company, a partnership, an S Corp, or a C Corp. So what are the differences between the various entities? I can give you an example. A sole proprietor really is a default entity. So let's say I decide I want to sell lemonade. I just set up a lemonade stand. If my intent is to make money, to generate revenue, then essentially I am a sole proprietor. I didn't file any official paperwork. But if I decide to join with, let's say, my sister, my sister, she decides to come in and help me sell lemonade. If I don't file, or if we don't file any paperwork, then we've created a partnership by default. 2 people, a partnership is 2 or more people that engage in the activity to generate revenue, right? So that's a partnership. A limited liability company can be a single member or a multi-member. A multi-member is actually treated as a partnership. A single member LLC for tax purposes is treated as a sole proprietor. So what does that mean? The advantage of having a limited liability company is that you get the characteristics of a flow-through entity, whether it be the sole proprietorship or the partnership, but you are legally protected. Your assets are legally protected, right? So if you go out here and have a car accident and someone sues you while you were in the transaction of conducting your business, particularly let's say if you were a landscaping company, then they would sue the landscaping LLC company, and they would only be able to go after the assets of the LLC company, not you individually. So in some instances, that's why it makes sense for you definitely to protect yourself so that you don't end up losing your personal assets. All right. S Corp and a C Corp. A S Corp and C Corps both are separate entities. The advantage of one, a C Corp, is that, well, let's start with S Corp. Why sometimes people will set up an S Corp is because you get the protection of shielding your legal liability or your liability, but any income flows through to you on your personal tax return, but you escape 15.3% of taxes, because as an S Corp, you don't pay the FICA tax, the FICA portion of the tax, right, on the revenue that flows through. C Corp, you've heard of double taxation. Double taxation really occurs in a C Corp because of the corporation pays the tax, and then if any dividend is distributed, the shareholders pay tax, right? So that's a little bit of background. So why is this so important to look at your business structure, right? The business structure is so important. It's imperative because how you set up impacts your tax liability. Case in point, I had a client who came to me a couple of years ago, and he was set up as an LLC. I asked him, why was he set up as an LLC? He said he didn't know. He just heard that was the thing to do, right? Set up as an LLC. All right, I said, look, I really think we should consider converting you over to an S Corp. We made the conversion, and we were able to save him about $25,000 on his next tax bill because we made the conversion over to an S Corp. So that's a good example. A bad example is, again, I'm a tax resolutions attorney. So I had a client who had landed a contract. It was about $1 million. She landed a contract, and she was set up as an LLC. She came to me after she had the tax bill. And when she came to me, she owed about $500,000, $500,000. And that's because she wasn't structured correctly. Had she came to me beforehand, then I would have looked at the contract. I would have said, look, we need to convert you over to a C Corp or S Corp. And from there, we could do some tax planning. So the reason why I'm sharing this with you is because if you are in business and you know, may have some contracts and generating revenue, you definitely want to evaluate how you're structured, because again, how you're structured matters. And in particular, in light of this new tax bill, remember I told you, now is a great time to be a business owner, because what happens is with this tax bill, you get additional savings as a business owner. So let's go into what the tax bill actually says. All right, I'm going to grab my notes because I want to make sure I give you the right information. And although I know it, because it's new, I have to continue to kind of read it and go through it. So what the Tax Cuts and Jobs Act says is that there's a general, basically what it says is that it gives you a 20% deduction on qualified business income for pass-through entities. So what are the pass-through entities? We just talked about it. Sole proprietor, partnership, LLC, S corps. Those are pass-through entities, right? So whether you qualify for the 20% deduction is a function really of three things: the type of income that the business generates, the type of business, and the taxpayer's income. The 20% deduction is the maximum deduction you can get. But if your income, you can kind of phase out and get less of a deduction depending on your income. All right, I'm gonna go into that a little bit more in detail. So the type of income that the business generates, right? So what does that mean? The business income must be connected to with the conduct of a trade or business within the United States. This does not generally include investment income activities, which would be capital gains, losses, dividends, interest income. So all that's out. Okay, you can't qualify for the 20% deduction on that kind of income. The type of business. Now this is super, super, super important. And in all honesty, I think this is where all the litigation is going to happen. Because some businesses will try to get in, and some people, and IRS will probably say, no, you are a disqualified business. So the type of business, look, everybody, I want you to hear me. There's a 20%, there's a limitation placed on whether you can get the 20% deduction when you are a disqualified business. So I'm going to actually read the language of the statute so that you will know what a disqualified business is. A disqualified businesses are services in the field of health, law, accounting, actuarial science, performing arts, consulting, athletic, financial services, brokerage services, or any business where the principal asset is the reputation or skill of one or more of its employees or owners, or services that consist of investing and investment management, trading, or dealing in securities, partnership interests, or commodities. So, as I said before, I am an attorney, right? So I actually am considered a disqualified service business because I'm in the field of law. So that doesn't mean that I can't get the 20% deduction. What it means is that I can get the 20% deduction provided that I don't go over certain income, which is what next I'm going to talk about, the income. If I make more than $157,000 as a single woman, I will begin to phase out. So when I say phase out of the deduction, so I may get, rather than 20%, I may get 18% or 17% or 15% or 0%, depending on how much income that I generate. So it phases out all the way up until $207,000. Once I hit $207,000, that's it. I get no deduction whatsoever, right? So if I was married, then, or for you married people out there, the limitation is $315,000, and it phases out at $415,000. So you can get the maximum deduction if your income is $315,000 or less. As you begin to move between $315,000 up to $415,000, that's it. You do not qualify for the 20% deduction. All right. So if you have any questions, feel free to put it in the comment section. I see I have a couple of clients on. Thank you guys for joining in. I see a couple more people from North Carolina joining in. Robbie, thank you so much for joining. I gotta say this, go Tar Heels. We won last week, so I'm definitely still riding on cloud 9 because of that win. And so that's really what it is when we talk about pass-through entities and how this new bill really helps you if you're a pass-through entity. Right? So now let's talk about the C Corp. The C Corp is really, I'll just give you the general rule. C corporations now, they are being taxed at a 21% flat tax rate. So that's what you need to know. 21% tax rate for the corporation. So why is this 20% deduction for the pass-through entities available? Because Congress felt that because they were giving a lower tax rate to corporations, that they needed to do something comparable on the pass-through entity side. So I know it's a lot of information. I just want to share enough with you so that you can begin to start thinking about whether or not you need to have a conversation with your tax advisors, whether or not you need to begin to think about how you're structured, think about whether or not you need to pull out some of your different services, your product lines. It's a major opportunity for tax planning in this bill. So don't think you can do it by yourself. You definitely need help. If you need help, feel free to contact me. I can be reached at 301-306-1234. That's my office line. Or you can email me at beverly@irshelpattorneys.com. The other thing I want to share with you is, I'm in private practice by myself. I'm in private practice for myself, sorry. I also run the tax clinic at the University of Maryland, which is a low-income taxpayer clinic. If you know someone who needs assistance, they have a tax problem, and they may be low income or they need help, then make sure you give them my contact information over at the law school. It's 410-706-3295. Again, 410-706-3295. Again, we are taking cases, and we love to be able to help someone. Low income is anyone who is, let's say, a single person household who makes $30,000 or less. A two-person household makes $40,000 or less. Three-person household, $50,000 or less. We love to be able to help you, and we are looking for cases right now. So I see a couple of comments. I see Lakia. Thank you. She's saying I'm a good resource. Thank you. And that's really it. Oh, one more thing. Next week I will be on the Small Business Report, which is Sirius XM Radio channel 141. I really need questions to be able to answer on the radio. So if you guys have questions, if you can inbox me or just comment in that section about your business concerns. One of my passions really is working with business owners, so that we can, I'm a firm believer that business is really the way to go. And entrepreneurship, I've been in business for over 10 years, over a decade actually. So some of the mistakes I made early on, I'll make sure that make sure you don't make those same mistakes. That's why I give this free content like this. That's why I take the time to, share with you some of the things that I know. So again, if you saw something that can help you, or if you need clarification, make sure you just comment in that section, and I'll answer the questions after, we get off. And if you know someone who needs this information, please hit the share button. Thank you guys so much. Yes, Ms. Rayford, I will be contacting you. I know you emailed me. Okay. All right. Thank you guys so much.